Short sale negotiation. Short sale package. Objectives. The objectives of this chapter are to understand the requirements of the short sale package, learn how to best present the material, know what to include, what not to include, as well as the do's and don'ts of short packages. For the purpose of this online class, we will assume that in this transaction there are two loans secured by the property. There is a lender secured in first position. We will call this lender the first mortgage. There is a lender secured in second position. We will call this lender the second mortgage. For teaching purposes, we will also assume the following for this transaction. There is enough to pay the first mortgage in full, and that only the second mortgage will have to discount. There are no other junior liens. Taxes are negligible. A run-of-the-mill, stable market condition, typical short sale looks like this. Of course, there are much more complicated transactions. This example is very illustrative for the purpose of teaching how short sales work. Under these conditions, the first position lender will not discount. The second position lender will discount. Unless there is a lot of depreciation, this is the most common condition. To continue with the flow chart and example, the next action the buyer or listing agent needs to do is open contact with the lenders. From the second mortgage, a short sale package is requested. From the first mortgage, a payoff statement is requested. This is a good example of a short sale letter of intent. This letter needs to be faxed together with the authorization to release information to the loss mitigation department. The letter says, "We will need to buy this property on a short sale basis. The value of the property does not support the debt secured by it. Please send us your short sale package and extend the trustee sale 60 days. If the creditor is open to a possible short sale, they will say so. Most creditors send a short sale package to the person negotiating the short sale. Others just expect the purchaser or listing agent to provide one. This is when negotiations begin. This is a good example of an acknowledgment and short sale package reply. It is from Washington Mutual. The list is basically always the same with all creditors. It reads, "Ensure your package is complete. Incomplete packages will be discarded." The creditor also wants a personal hardship letter. This document is very influential in the short sale decision. It is good to include as much evidence as possible with it: medical bills, death certificates, unemployment stubs, etc. Third-party disclosure is the authorization to release information. The financial worksheet is a financial statement. They also want the last 2 years of tax returns. This will let the creditors know the debtor's tax reported income. They want to see the last 2 months of pay stubs. With this, the creditor will know how much the debtor currently earns. The last 2 bank statements are for the creditor to see debtor's current savings. The purchase and sale contract is for the creditor to know for how much the collateral is being sold. The estimated closing cost is the HUD 1. In this case, Washington Mutual is allowing 5% for 2 agents and 2.5% for double-ended agent commission. They also state that the discount will be as low as 80% LTV. This is a typical short sale discount. The creditor also states that it will not allow proceeds towards buyer's closing costs or repair credits. This is typical. If there is a bankruptcy, the creditor will need to see documentation of discharge, dismissal, or relief from stay. Some creditors will not start a short sale until there is a relief from stay. In this case, this bank will take 4 to 6 weeks to process a decision. The last requirement is that they want the short sale package to be mailed. To review, a short sale package is almost always the same for the majority of creditors. Creditors want the following: a hardship letter, a financial statement, the last 2 years of tax returns, the last 2 months of payroll stubs, the last 2 months of bank statements, a copy of a purchase contract, bankruptcy information, and the HUD 1. As you can see, other than the purchase contract and the HUD, the short sale package is all about the typical financial condition of the homeowner. For the creditor, the objective of the short sale package is to determine how much can the homeowner pay now and in the future, and how much will the bank get from the sale of the collateral. In other words, for the creditor, the short sale package is all about collections. What ultimately the homeowner needs is to be out of the financial problems associated with the property. This is the main reason the client is working with a listing agent or an investor. Because of this, the short sale negotiator's short sale package objective is to provide evidence that the homeowner can't possibly pay any more and that the value of the sale will provide a good recovery for the creditor. In other words, for the agent or investor, the short sale package is all about debt relief. Creating a short sale package. To create a satisfactory short sale package, the sellers need to provide all the material requested from them. The investor or listing agent puts the package together. The reason for any unavailable items needs to be explained. One of the most important items needed in the short sale package is the hardship letter. The hardship letter. The hardship letter is a document written by the debtor. It defines and explains the hardship condition obstructing the debtor from performing on the obligation to the creditor. The explanation of hardship needs to be corroborated with evidence. What is an acceptable level of corroboration varies per individual creditor. Hardship letter characteristics. The hardship letter needs to clearly explain the reasons why the homeowner can no longer continue to fulfill the home loan payment obligation. The document should be as explicit as possible and be entirely truthful. The homeowner needs to not exaggerate, but definitely not understate the situation either. It is a good idea to trace back to origin of the hardship. Often the reasons for the present hardship are years old. Events and situations often take years to catch up with a person. It is very important to state all the options the homeowner tried in order to resolve the default, and why all of these options failed. The truth is plenty. There is no reason to lie. This is a good example of a hardship letter. It has 2 pages. It is handwritten and shows plenty of drama, yet there is no exaggeration. The homeowner even encourages the creditor to verify the facts. It reads, "Dear IndyMac representative, I bought this property in 2001. It was a damaged property, and I got a construction loan from IndyMac in order to demolish and build a new house. As soon as I finished the house and was ready to connect the sewer, I realized that the city of Sandy, Oregon, had changed its plans for the sewer line without me being notified about it. The house is in near completion, but it is not habitable because it has no sewer." How many banks want to hear that? I have been litigating with the city of Sandy, Oregon for over 2 years so far. There is no way this can possibly move forward because of the legal circumstance. Is litigating with municipalities a banking expertise? Having been consumed by this and at the verge of bankruptcy, I had to stop making payments. How long can a bankruptcy take? The house has been on the market for over 800 days with multiple realtors. It is evident that this is a problematic property. I'm trying to avoid Chapter 7 or Chapter 13 bankruptcy. For the creditor, this means that the property may end up stayed for a long time. If the homeowner files for Chapter 13, this can be years. Because of all the medical expenses created by this hardship, which caused me to have a heart attack. I need to sell this house in order to get out of this problem. There is no way I can keep paying. This is the truth of the matter. You can talk to me at any time on this number. Although this homeowner gave the phone number, it is not necessary. This is just an invitation to an inordinate amount of collection calls. I will not accept any profit that may or may not come out of this transaction. This is evident and understood from the first moment. However, the seller wanted to sign and make me sign as well. Hardship letter tips. These are a few hardship letter tips. A handwritten hardship letter is better, but typed is okay too. Add as many supporting facts as possible. If available, provide supporting evidence, such as divorce and death certificates, insurance claims, litigation documents, etc. The homeowner needs to demonstrate that he is looking for solutions and still facing the problems, not running away. Show some emotion, and do not make the letter too long. Hardship letter things to avoid. Here are some things to avoid. Defiant language such as, "You can have it back." Appearance of carelessness, for example, "I will file for bankruptcy anyway." Higher priorities. There is no need to say something like, "My family is more important than what I owe to the bank." That does not sound good to a creditor that is considering forgiving debt. Avoid giving the telephone number. Collection calls will not easily stop. Financial statement. The next critical element is the financial statement. A few banks insist on using their own forms. Typically, if these forms arrive by fax, they look like this sample, very distorted. It is a great idea to have a collection of different creditors' financial statements and other forms. This can save a lot of time. Most creditors do not provide the financial statement form. It is a good idea to have your own forms. A benefit of this is that the form is immediately available. Have this document at the moment of taking the listing or signing the purchase and sale agreement. The requested information is always the same. They want the borrower's and co-borrower's personal information, including bankruptcy. They want their employment information, and they want to know the monthly income of the borrower and co-borrower, as well as the monthly expenses, assets, and liabilities. It is important that the name of the company and name of the person doing the short sale be stated in the form. Of course, they want the date of the statement and signatures. The financial statement is a simple form. However, the homeowners struggle with it. In this example, the homeowner did not add the total income and did not sign. The homeowner forgot to do this, then did it later after being reminded. The financial statements tend to bring pain. The hardship letter usually comes about quickly. It is better to get the hardship letter and financial statement at commitment. That way, there is less procrastination. Last 2 years of tax returns. Usually only the 1040 forms are needed. If there are other important deductions, include those too. What are the chances of someone in mortgage default being up to date in tax payments? Commonly, homeowners in foreclosure did not file the previous year's tax return. Often, no tax returns are available. Last 2 months of payroll stubs. If the homeowner is employed, he needs to provide this material. Current payroll stubs are, of course, not available from unemployed homeowners. If the homeowner is unemployed, he needs to provide the latest payroll stubs available. If the homeowner is self-employed, he needs to provide a current profit and loss statement. Last 2 months of bank statements. The bank statements are always required in the short sale package. Sometimes the creditor overlooks these items. Bank statements must be provided regardless of balance. Unavailable documents. It is extremely common for several required documents to be unavailable. One way to cover this void is for the homeowner to include an explanation note. Additional helpful documents. It is also a good idea to include, if relevant, a few additional helpful documents. The idea is to lubricate the transaction. These documents include proof of listing history, proof of funding for hard money, conventional loan pre-approval letter. If paying cash, bank statement showing funds, photo report showing condition of property, CMA, construction estimate, offer explanation. Also, any other document useful to demonstrate the value of the presented offer. This way, the decision makers will have the option to see things from the investor or real estate agent's point of view. Some loss mitigators take these items into consideration. Others totally disregard them. If there is time and it makes sense, it's better to send them. Here are samples of additional helpful documents. Proof of listing history. Most creditors want to see at least 1 month at full debt value in the open market. For them, that means the MLS. This property was listed with just about everybody, for a total of 858 days. With this evidence, the bank will not request more listing time. Proof of funding, hard money. There is nothing like being able to close quickly. A proof of hard money funding is very helpful for this. A bank statement showing the money works even better. Conventional loan pre-approval. A proof of conventional loan pre-approval is usually sufficient for most short sale packages. Photo report. If the property is in poor shape, it is good to provide evidence of all the shortcomings. CMA. Banks do their own CMAs. This is covered in the next chapter. Bank CMAs usually come in high. An accurate CMA with price justification can sometimes be of great help. Ideally, the CMA points out the most similar property and justifies the value well. Construction estimate. If the property needs repairs, a professional construction estimate is extremely helpful. Offer explanation. Especially with problematic properties, it is better to explain the offers. This is a good example of a problematic property. Just to name a few issues, this property is disconnected from the sewer system, has legal problems with the municipality, and the total cost of resolving the issues is $110,000. REO net sheet. Sometimes it makes sense to show the bank that the offer is very reasonable, considering how much they will end up netting after a foreclosure. For example, with this property, the total REO expenses will be $36,000, and the maximum value the property will bring is $280,000. That means that in the end, the creditor at best will recover only $244,000. That demonstrates that the offer for $260,000 is much better than they will get otherwise. There is software that helps make these REO calculations simpler. Checklist. Another good idea is to include a checklist of all the materials included in the short sale package. Short sale package tips. Clients serious about a short sale provide all the material soon. It is okay if the client needs some time to collect the material. It is okay to help somewhat if the client is struggling. It is not okay if the client is totally procrastinating. Completing the short sale package should be fast. Get the package together quickly. Don't overanalyze it. Getting back to the flow chart, the investor or listing agent submits the short sale package. Deliver the short sale package as per the bank's request, fax, email, or mail. Now, based on the documents provided in the short sale package, the creditor will determine the present and possible future financial condition of the debtor. With this information, the creditor will assess the possibility of ever collecting the entire debt value. That is why the short sale package is so important to the creditor. Review. All institutional creditors require a short sale package. The document list is always the same. The property owner provides all the requested material. The agent or investor puts the package together. Creditors want all the requested paperwork. If needed, include additional documentation that can lubricate the transaction. Unavailable documentation, such as missing tax returns, should be explained. The package presents debtor's financial capacity. For the creditor, the short sale package is a collections tool.